Hello, everybody. Black Thursday, markets gapping lower. NASDAQ down 65, Dow down 300. Long-term bond yields sharply lower, gold rallying again to the upside. So here are my thoughts going into today. Also, Alien's going to be joining us in about 10 minutes. He was spot on almost every call he made in January. But take a picture. Here's a third drive formation. Can we rally up to 114 first? Maybe, but here's drive 1 in the euro, drive 2 in the euro. This is a 4-hour. Pretty classic divergence. This new high is made under 70. Of course, the pound is a weak sister. While euro is making new highs, the pound peaked on the NFP. Still believe that's the case. The yen's almost at the 109 target. And here's something else that I'm seeing. Crude down almost at new lows. What the heck is wrong with Canada? Canada should be already above 141, 142. Instead, it's kind of dogging it. I'm not impressed. You know, maybe we get to 141.89, but I would have thought with what crude did the last several days, we'd already be 141.5, maybe 142. So those are my thoughts coming into today. Looking forward to Alien updating us now that a lot of his objectives have been achieved. Who's in LAR today? Sinatra's here, Roland, FXB, Ed ZFX, Fib Stalker's here. Hi, Giuseppe, Fabian, Jake, Yevgen, Numbers, Timbo, Fame. Is this color better on me, Fame? I'm not worried. I promised you I wouldn't wear my powder blue. Hi, FX John, how are you? This is more like me, the Johnny Cash Elvis look. Right? Huh? One time, there was a time I wore this shirt to a party when I was back in Chicago. And some sarcastic guy asked me if I was a waiter at a Mexican restaurant. So that's what he thought about. That's what he thought about this look. Or a busboy. He asked me if I was a busboy at a Mexican restaurant. But that was a guy. The chicks like it. How's everyone doing? Hey, Numbers, how are you? Do I look like a busboy? Give me a Y if you think this shirt makes me look like a busboy. What do you think, Fame? Would you like another glass of water, or can I warm up your coffee? Anyway, if you're looking for the dollar to get killed, I think we're close to completing this in euro. Ricardo showed this as well, and you know, we have this back test of the breakdown line. And even if the dollar is going lower, I think it'd be a natural for it to pull back to 110.80. So even if the dollar is still no good, I think there could be a dollar bounce that would take the euro back down towards 10.80, which was old resistance from this high after Draghi. Hi, Azig, how are you? I'm wearing my busboy shirt. So Alien was talking about 109 in the end for a target. We could still go there. He was talking about a bear market rally in the pound when we were down here last month. Could we trade 146 again? I don't think so. So I think this was it. All the crosses are home run balls. Guppy went to 160. I was talking 125 euro yen, and we got down to just under 126. That might be it. That's your second job, Goldie, really? How are you, Goldie? Tosin, great call for the S&Ps to go down. SW made a great scalp yesterday in the crude. Okay, so you're seeing the same thing as me, Sinatra. Who taught you about these divergences? Where did you learn about that? Maybe you knew about it before you came. I know I'm not the only one with this teaching. 1775. Oh, okay. Maybe. We'll see. But SW made a great trade in crude yesterday. Got that bullish news that it all gave back. SW bought it before the EIA news. We got this big pop that it failed from. I think crude is turning. Do I sound like a broken record? There you are, SW. I bought more too. You're the man. I nominate SW as the man who bought the crude on this candle yesterday. And he took profits on this pop. So it was good for about $1.50. So I nominate SW for the Man Award. Anyone second that nomination? Anyone second that nomination for SW? He bought it before the EIA news. It popped almost a couple dollars. Zurich's got a look. You're calling it the Sinatra 3 drive? Oh, come on. That's a Pinker 3 drive. It's really a J.R. Hill 3 drive. Yeah, so it could push up again. Then I'm thinking back down to 110.80 minimum, back to maybe this pivot, at least 11.10. Thank you, Zurich. Everyone thanks Zurich and Sinatra for their Euro views. That's right. It's a Pinker 3 drive. I think I've made it famous on FX Street anyway. Thank you, Zurich. Thank you, Sinatra. One more high in Euro Pound. Okay, I agree with you. We're almost at the Euro Pound targets. If you recall, the Head and Shoulders target off the weekly, the head was here at 69.30 with a 74.40 neckline. Gives you 79.40, close to the 200 week. So 79.40 looks to be the place for it to end. Okay, Rick, that's fine. No kidding. Well, that's a compliment, Goldie. That's a compliment. Euro Pound is diverging here on the daily. Okay, thank you, Ricardo. So stand by for Alien. He'll be with us in a couple of minutes. Also, very good advice. Half-size positions in this kind of volatility. I wrote this song because of Ricardo. I wrote the, even though I believed in it before I even knew Ricardo, but you, oh, use less leverage when you trade the market. Use wider stuff so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. Use
Great
less
song.
leverage. How you doing, buddy?
Hello. I'm fine.
Good.
How
You
are
know
you?
what? Almost every call you made at the beginning of January, 1,800 S&Ps, 109 yen. A push down in the dollar, a rally in the pound up towards 46 before 33. Euro right around, you were spot on too. I'd say even though you were positive gold, maybe the only mark you missed, and I missed the whole thing, was, I don't think you expected for this particular wave to be as dramatic as it was from here.
Yes, I have to agree. I
Okay,
didn't.
so you're not, can you work on that? We expect perfection from you, so I'm hoping you could work on that a little bit and be right about everything all the time, every single day for the rest of your life. Can you do that, buddy?
No, that's not possible.
Okay, I will take the pressure off you. Anyway, very, very good
But
work, Alien. Very good
thank you.
work. You saw this coming. I hope you capitalized on it. And now
Yeah.
that these things have been fulfilled, it's most likely possible that now you're going to look for this big dollar rally, or do we still, dollar
Oh,
still
just
have
to
some
pull
more
back
work?
to.
Huh?
Yes. Yeah.
Okay,
Let
take
me
it away.
start by. Okay. Let me start by saying it was just the famous thing to say, plan your trade, then trade your plan. So that's
Right.
what we did in early, I mean, at the end of the year, and we capitalized in the rest of the month. So now we
Who's
are just
we?
taking profits. I mean, the community. I'm sharing this with the
Okay.
community.
Because sometimes when I'm talking about I say we, and then I'm
Yeah.
asking myself, I go, well, we talked about this, and then I realize that unless I have multiple personalities, which I do, it's really I, not we.
Yeah.
I think we say we
Okay.
to be humble, or we to give us cover in case it doesn't pan out, so we could blame it on the other guy,
Oh
which is
no.
which is us, right?
Yes.
All
But
right,
you
buddy,
know,
let's get to the
okay.
charts.
Okay, I will share my chart as usual. 1 second. Sharing entire screen share. Okay, here you go with the S&P chart. You got it?
Not yet.
Okay.
Got to
At the
hit the
same time,
start. Yeah, got
yes,
it.
I did.
Got
Okay.
it.
So, uh, the big surprise, but it's not a surprise, the S&P is still holding that area. If you know this, this is a really important area, and we said last month this could be, I mean, a tricky move. While USDN breaking lower, US indices will hold, and this is exactly what happened. I mean, if you look around, um, the DAX, the Russell, the Nikkei all broke lower, while S&P and Dow Jones and Nasdaq hold the support area. I mean, we didn't see an extreme move like
Yeah,
we saw, for example, in case of the Nikkei, almost
yeah,
reaching the 50 back area. So, I mean, this was
yeah.
a
I would
strong
have thought with
breakout.
the yen. I would have thought with the yen going to your targets, and we came within 100 pips. of your targets of the 109 level, that the S&Ps would have already been 1,700.
Yeah, but this is
That's
the
why
trick.
that's why I
You
think there is a chance for your first scenario to set up another rally into I
Yeah,
don't know what
and
that.
that's what I'm thinking too, because I mean, at the start of this year, there been a change in the correlation between, I mean, oil, S&P, and the yen. I mean, there was a new shift in the market. So I tried to figure out which market will be the strongest and which will be the weakest. That's why I said stay away from S&P and Dow Jones if you want to short, and look for I mean other opportunity, because the yen trade was a perfect one. We said we will get back to retest. You called it yourself, a retest to 121 area, and we
Yeah.
had the strong rally to the downside, and we achieved this target. I mean, it missed the 109, but it's a monthly support. And if you remember the chart from last year, we talked about the 110 area. I mean, it's a
Yes.
big area, but every time we got a break, we come to retest it. Every time we get a break, we come to retest it. So this time, this retest could either fold for I mean, a new rally, or just another small pullback before going lower. So
Back
the
to the
structure,
breakdown. Back to
yeah,
116. Yeah. Okay.
116.
Yeah,
I
that'll
think
be the
this is,
line in the sand. We negate the breakdown and then we get higher levels. You know, then we get 122 again, right?
yes. I mean, it's going to be a tricky move in the coming weeks, and I have to be honest. This area represents maybe for aggressive trader a good opportunity to go long. I did it myself this morning, and I think it's worth taking, because looking at yen reaching this level, while S&P is still holding this trend line and finishing this move, I think we still could get this rally, at least 50 back of the decline. I mean,
Yeah,
it's around
a lot of that 61.8, I think around 1980 was what,
yeah.
1978. Yeah. Okay.
So this is, I mean, the bigger picture for S&P and the yen pairs, because we still have more downside target for the dollar around the 100 mark, and even we get failing rally, this could be also a good short opportunity. So I mean, in the shorter term, the bigger picture is divided. We have to play, I mean, to play it step by step and wait for, I mean, other ways to find the setups. For now, it's going to be a pullback. I mean, if you are short, it's better to take profits, and if you want to take long, this was a good spot today, because providing this 100 pips fall, it has to pull back sooner or later, and this is the area to take it. And
Yeah,
if
we've had
you switch to,
1,000 pips, so
yeah,
why not halfway back to the breakdown?
yes,
Yeah.
1,000 pips fall, so that's how market works. It will pull back, and then we'll decide the next path. But let me go back to,
Okay.
and this is only, I mean, I've been sorry, not this chart, this one, for the oil, because recently the indices around the world have been crashed during the oil crash. So this move have been a bit was a bit correlation with the, and this is looking similar, taking similar paths. So for this oil reaching the 26 area, you know, we talked about this at the start of the month. We said we were about at 37 area. I said my target is still 26. We missed it the first time, but we got it today. And looking at the smaller structure, I think we are just finishing a move to the downside. With this support, we will get a bounce, and this bounce will support a move higher in the dollar yen. You still there,
Okay.
Dale? Okay.
Yes.
So, okay. So with this move,
So you get a bounce. You get a bounce in crude, yen, and the S&Ps from.
Yeah,
right
that's what I'm
around.
expecting for even I'm expecting the oil to go lower, but at least we will get a pullback because this is already initiated in the dollar yen, and this is already supported in the oil. This is a good opportunity. I mean, there is a lot of structure. I'm talking about Elliott waves and harmonics pattern, and they are supporting a pullback to around. I mean, let me zoom out. This is the head and shoulder we talked
I'm
about.
thinking back to 38.
Yeah, but I don't think this will be the one for 238. I'm not sure, but for now,
Then the
I'm
S&Ps
thinking.
aren't. If you're only looking for, what are you looking for? A $3 rally? From here,
Yeah, something to
29.
retest. Yes, to
Okay.
retest the head and shoulder neckline, and
Okay.
we go lower to 20 because I mean the correlation starts. I mean when the correlation shifts, it will just stay for a period of time and then go back to normal because this move will start with the dollar yen strengthening, and then later just to the oil will break out. I mean will break out from the correlation. This move could be just a weakness in the oil, and the dollar will continue to be strong because I'm still expecting lower targets for the oil because my first target was 26, but now I'm looking we could go to 20 because it's still holding the bearish channel, and nothing said we can break to the outside. I mean, your case for your case.
Where's your broader channel line come in?
I mean to
the blue
this one or the
no, the bigger one above it.
The bigger one.
Yeah.
Yes.
Yeah.
If you go from here, it will be around 37, 38, like you said it. But I mean this.
Belief. That's my belief
Yeah.
before we go to 20.
Okay, we can do something like this. This will be a strong rally. I mean,
no. 1.618 of the last bounce. Anyway, we'll see.
We'll see. But
I hope you're wrong.
You have to keep in mind, yes, the line in the sand for now will be the neckline. Either way, this is a good opportunity to go long, even for an intraday. For small trade. Okay. And you can just, when you reach here, you can move stop loss to break even and wait maybe for a break to the outside. But for now, we are targeting lower moves, even though the dollar yen, because if you want to take the path of 38 and keep the correlation on, this means a straight ahead pullback to this level for dollar yen. I mean, this will be a sharp reversal for dollar yen. So I'm not quite sure about that, but at least we will get this pullback. So this pullback should be supported with the S&P and the oil. And at the same time, if you go back to the dollar, the structure, I mean, last month we talked about this move. It took some time before breaking to the downside, but for now, it didn't quite look as a bottom for me. So I said this area should be supported, but now looking to this structure, I think any it will even extend a bit lower, but any bounce should be sold off to retest the 93 area, because I was thinking we will get a new rally from here, but I think it's going to fail. Looking at similar paths and different instrument, this could be a failing rally in the dollar to go back to the support area about 93, 92, and we reserved this scenario for, at the extreme. We said we could just still be trending ranging in the big rectangle, and this is what's going to happen, because breaking below 95 will invalidate a move to the upside before a test of this level.
Okay.
And
I'm kind of in the camp. I'm kind of in the camp that we're bottoming in a lot of these things you're talking about, and that this would kind of make sense. I'm curious to see what you're saying in the gold, but I've been kind of thinking that the dollar index makes a new high, maybe 102.50, and while the dollar index is making a new high, we get a wave 2 pullback in gold, maybe back to 1110, 1080, something like that. So
a
we could
deeper
have one
pullback
more.
in gold. Okay.
Okay, yeah,
Something like that.
yeah,
Okay, that's possible. That's
yeah,
possible because but if you see this kind of move in gold, I mean, it could be tricky because it looks really impulsive, and it looks even better than the rally we had back to back here. It have
yeah,
clear structure. It's more
yeah,
impulsive, so that's
yeah.
why I'm thinking the pullback should be just shallow, and it
Okay.
will support a break to the outside. That's why I don't favor selling the gold or anything. I prefer to wait for pullbacks and
Yeah,
keep buying it for now. Even this is a
yeah.
strong
So
area
I see you
for
have like a 1680 number up there after 1300, but 1300 seems to be 1285 seems to be your next target, right? And then we
yes,
get
for
through there that we could go to
yeah,
15, 1600, huh?
we can just retrace to this breakout level. I mean, we have too many targets in the upside, but for now, it's going to be just so important to see the reaction around here. And even so, you can keep looking for new lows in gold. This is still valid because we have no breakout, because here you could say that this is a strong close for the gold, and we are going to break to upside, and the next week you get a full reversal. So we have to see a weekly close and then decide, because it could just next week we could just rally to new highs and then do a full pullback, and this is a bearish signal for the next move. So
Okay, well,
I
I
mean,
think that would a new lows in gold would imply new highs in S&Ps in my view,
yeah, that's for sure.
because
That's
it's
why
all been it's all been fear money moving into it because of stock market
yeah,
routes.
it's the same old safe haven market. Okay, this time
Yeah,
it didn't support the dollar, but it supported the gold, supported the yen, and even supported the dollar franc. And this is how you should see the risk-off mode and ways of switching to take positions. And like you said it, if gold is going to new lows, this will implement the S&P to new highs to around 22 marks, and this is still a target, and it's still a valid target. You can go long with stop loss below this channel. I mean, it's a valid trade, looking for new
yeah.
highs, and you will get a pullback. For me, I'm not going into any trades because I've been trading since the start of the year. I over traded my account. It's been a good month. I mean, I think it's my best start for a long time of a year. So I'm going to take, like I say, it's like I'm telling to take a pause to reassess the market, because after a good winning strike, everyone should
Mhm.
take a break because maybe the next move I'm not seeing that clear, and it could be just as messy as it gets. So for
Let
now,
me ask you this: after a good strike, do you pull money out of your account and put it into maybe more conservative investments, or do you, I think that makes it real. Brokers don't like it, but I think when you have huge windfalls, you should pull some money out of your most speculative accounts and put it into more conservative accounts, or even keep it in cash. What do you think? Hello? Maybe we
me,
lost him. Oh, go ahead.
I said I prefer to withdraw profits and keep it in cash. I mean, in my pocket. I mean,
Okay,
that's
yeah,
how.
in your pocket. Okay, that makes
Yeah.
it makes it more real than to feel it in your pocket. Okay,
Yes.
I
And
was curious because I think
yes,
that's awful good money management because they're only digits in your account. It's kind of like when you go to a casino and they convert your money into chips.
yeah.
And the
You have to
chips,
feel the
and
money.
right, and the chips, you don't value the chips the same way you value cash on hand. Okay,
Yes, of
so
course.
just a good idea.
Yes, there. Okay, let me just switch to the euro. I mean, I'll just put the euro chart from last month, and I want to point out the similarity about the structure we are having back to this one, because at this support, we never broke to new lows. I mean, it's
Right,
kind of a double bottom. It looks the same at here, kind of a double bottom, and the moment you think this is just a small pullback before going lower, euro just spiked higher. I mean, it was strong rally, and I'm just warning we could see something similar like this because let me put the live chart. We are here, and if this month will be will close above the 12 mark, this is a strong signal to keep away from the shorts because we could just get a sharp rally here to stop hunt the shorts,
yeah,
the bears, and
yeah,
retest this strong area because this is a strong
yeah. 120,
1.2 area.
yeah.
Yes, it's.
And
I
if it
mean,
does
still in the
that,
tape.
if it does that, the lows are in. We shouldn't see new lows in the euro. So it's
Yeah, it
got
will
to
be just
stop here for us to take out parity. Is that what you're saying?
that. Yes, that's what I'm saying because we
Okay.
have two paths. Either from here, because if we break this, it would be a strong move. And even
Right.
so, Dale, I mean, the market is full of surprise. Even when we hit this, looking at the structure is every time you have to look at the structure because this is how the market is sending information. Because even we can take these highs with a corrective move and still go lower because this is exactly what it did here. It took the highs,
Right.
it did
Yeah.
strong move, but in the inner structure, it was a corrective one, and it reached 161.8 target, and then continued lower. So this path could be the same for this move. Just a warning, we should be reaching a near-term top for now
Right.
to
Yeah.
have a pullback, like you
I'm
suggested in
thinking
a couple hours
110.80. I'm thinking 110.80. What are you thinking?
to retest this area.
That if we get a,
So.
yeah, retest 110.80. It was right there.
Okay. Okay. Yes, we could go to one. I mean, to keep this.
111.
If you want to, let me make it clear. If you want to look for new lows, this is your spot. I mean, it has to close below this area in a monthly basis, and you can go looking for new lows. But if we just get a shallow pullbacks and a small pullbacks, I mean, the euro is still supported, and we will get a new wave after we finish this. We will get new waves to new highs, and this could be huge for euro. Uh, if you go back to the dollar, I mean, it's the same trade, just because I said we're going to see this kind of pullback, and I'm thinking this gonna be a failing rally, and this will drive the euro higher. I mean, this is just my scenario for now, even though my
My
main
yeah, my line in the sand's about 98.50. That's where it broke down. The Dixie, in my
98.
view. Yeah.
Okay.
Once we took it, kept holding 98.50,
Yes.
98.50, and once it took
Yes.
it out last week, that was it.
Okay. So,
All right.
but if you get a pullback to 980.50, this will be a strong rally, and the euro would be already around here. So
Yeah. Yeah.
this is not that bullish for euro, and we could be
Yeah.
just failing. Anyway, for now, for the shorter term, we are approaching a near-term top, and we still maybe in the inner structure we will still be doing some new highs, but it's looking weaker and weaker, and then we will get the pullback, and this
Okay.
pullback is supported in the dollar yen retrace, and even in the franc, the dollar Swissy. I mean the Swissy pair, because it's at the same time still holding the 50 back, not like the dollar. Okay, let me
No.
go back to the dollar. The dollar.
That last chart, if you show the Swissy, it looks incomplete with two drives. See that? You have two touches on that upper line.
Yeah.
You
The
got
upper.
1, 2. You have what it looks like you could have one more drive. See that? You have the drive in March, you have the drive in November, and there could be one more drive to
Ah, you're
complete it.
talking about these highs. Yes, for to
Yes.
the.
Yes.
Ah, okay.
Yeah.
Yes, because this is, I mean, this is still supported, as I was going to say, and this is only a three wave. So if we are going to have a strong rally, this will take it to new high for sure. And I mean, this is just, if you take this as a triangle, we are retesting the breakout, and at the same time, we are still supported. So a move to the outside is probably what's going to do. But
Good.
you have to keep in mind that the dollar is expected to do a failing rally. So this move, if it doesn't fold as
Yeah.
a strong one, it could be just
Yeah.
a failing rally. So we have two main scenarios for the coming weeks. A
Right.
bounce is, I mean, the bounce, let me say, 99% sure about it. But the continuation, we have to see the pullback, the structure, to decide which path, either new highs or just another selling opportunity in the dollar. So you can take this and apply it on different pairs, and you'll find it's almost the same.
Okay. Before I do want you to get back to the pound because that was something you were
Okay.
talking about,
Oh, yes.
133. But here's my rationale. Before
Okay.
this big break in the S&Ps happened this year,
Yeah.
bears, the market sentiment, investors sentiment, AAII was real bearish before we even had the break. The break was
Yeah.
so vicious, where you have
Yes.
things, LinkedIn losing 40% of its value in a day, Solar City losing 30% of its value, all the momentum stocks, their backs
Yeah.
are broken. And I don't think anyone's really left long this market right now. Also, the VIX
Yes.
is way under
Both.
levels that we had back in August and again back in January.
Yes.
So you know how I think Mr. Market is the meanest guy in the whole universe,
Yes.
and that you know that I think people for the first time are thinking about shorting the market or getting out, and everything they see on TV, and
Yeah.
the radical division politically going into an election year in North Korea, sending up ballistic missiles, and we're on the verge of war in so many different areas that the one thing the market could do right now would be to give us a marginal new high in the S&Ps or head towards your target, and people will think everything's okay again. They got out down here, they get back in above 2100, and then they pull the plug. So that's just my preferred scenario, and that's my bias how I'm trading right now. I could be dead wrong. I've been wrong
But
a
that would be the
zillion
perfect
times.
scenario for the market. That would be the perfect scenario to play out in the market, to get everyone on the wrong side, and then go your way. So
and then lose 50% of its value from 2200. I'm also for several months people have been pointing towards this April time frame. So I think if this is going to happen, it's going to happen quick. I think between here and maybe the equinox in late March, spring to April. So That's just my gut
that would be
hunch,
good time frame.
Noster-Pinkard view of what you're presenting here.
Okay, Dale. Yes, I have to add. Maybe if we get this rally till April and we get the May sell-off as usual. Like they say,
Yeah.
sell in May, say in May, and
Yeah.
you could
And
be
go away.
right about. So yes,
Okay.
you made a good point, and
I mean,
but
I'm not hearing anyone, maybe a few guys saying, well, you could buy the market carefully, just have your shopping list and just put a few pieces on. But, Ray Dalio, famous guys, talking about the bloodbath. And then you come back to a guy like Martin Armstrong, who, when
yeah.
I interviewed him, thought we would hold that 1800 level. We've taken it out a little bit, but he's pretty sanguine until 2017. And still pretty bullish the dollar. So the dollar could have that one more run, and I think that would be supportive of the stock market, supportive of crude oil, and short-term negative the gold market. Those are my calls, but yours are better.
No, even your calls are perfect, because I mean that would be the perfect scenario, and that's why I lean to. I mean, that's why I added alternatives. So I mean, because I don't like perfection in market, because if I'm expecting a perfect reaction from gold here, just to follow this channel and go lower, I mean, it looks too perfect to be true, but to be true. But this could happen, and nothing could change, and the dollar could just from here could just start rallying to new highs, and this will support your view. But I love to take it easy and
right, a day at a time. Do the right thing today, and all these
yes.
long-term forecasts are,
Yeah,
they come and go.
but you are right about something, because if you take indices, you have I love to do these things in a similar way, because when there is a good opportunity to go short, I don't look at S&P and Dow Jones. I just look to other markets, and because they really break to the downside strongly. But when you want to go long, it's better to stay with the US market and go for longs, because the long side tends to be clear and tends to be stronger. That's why short the weakest and buy the strongest. And for now, this is presenting a long opportunity. And I mean, looking my way, I'm taking this as a long opportunity, and it could be a home run for now. And if Armstrong is right about it, this would be a really good move till next year. So why not?
Right. I think Armand also thought, he was talking about this last year, that he didn't think the bear market in the S&Ps would happen until Obama leaves office. And then we have the big bear market. So we'll see. Did you want to wrap it with the pound? The pound has been showing much more relative weakness than the euro.
I mean, it was a simple move, the pound. It did it in just 2 weeks. It retested the last low. I mean, the breakout, and we are just trading low. I mean, it's so clear. Just don't complicate things. It was a clear structure, going short around the 46 area. That's why what I did last week, and now hoping to get this down move to 133. If it's what's going to happen with the dollar. So at least for now,
I can't see the pound going to 133 and the euro going to 120.
Yeah, you are right about it. Because
I mean that would take the euro pound up to, I don't know, 90. From here, it'd be another 1,000 pips or so. Anyway,
yeah, but it's going to be supported if the euro going to make this move, this bigger move. The pound will be supported, and we will just hang around here maybe we do a double move to retest. I mean,
Maybe
to retest
48.
49,
Yeah.
48, 49. Yeah, because we said
Yeah.
we could go back here. So this is
Okay.
still we have to look a deep pullback and then this move, and then when the euro finish this, we will get the lower move. But for now, it's still looking bearish. So I'm sticking with the shorts, and I'm not favoring a short euro, but I'm thinking to take one maybe if we get a higher level around 114, 114.50. I will take a short and see how it play out if we get
Okay.
a
You know,
close
I
close.
actually have a third drive line there. I'm going to ask,
Yeah, I saw
I'm
it
going to,
and I
you
love
see
it.
it? So
Yeah.
the third drive, I love doing these talks with you. It's great collaboration. So now my platform's slow, but I think that's where that third drive line comes in. Yeah.
Yes, but
If
if
you
we
show
get
my screen addenda, you'll see here's the third drive line, just a shade above 114.
yes this
Okay.
line.
Yeah, and we're diverging
Okay.
pretty nicely. This last high that we posted was well under 70. So
I think we will.
another great presentation, Alien. Do you have plans to get involved, to get into the business and teach people or run a signal service, or you like keeping things simple and that means not getting involved with the public?
Yeah, I love I mean sharing my ideas, but I thinking maybe and when I finish my I have I mean some goals, and when I finish my financial goals, I'm maybe switching to teaching people the way I analyze market and the way I set up trades and everything else. I don't love I mean signals. I mean selling
Yeah,
signals, but I
yeah,
just want to help people. So maybe giving ideas to everyone else is a
yeah.
good thing to do when you are just finishing your day. So
Okay,
maybe
well,
in the near future.
you're already accomplishing that mission. You are helping people every time you're in
I
LAR,
hope so.
every time you do an interview like this. So, how long have we known each other now? Has it been a year yet?
Yes, almost a year.
Okay,
And
so you already have a year under your belt of helping people that you may see in LAR and helping many others that you don't see in LAR that watch your stuff when I tweet it and record it, et cetera, et cetera. So thank you for all
thank you
your
for
contributions to our
you're
community
welcome, Dale.
and
And
great
thank you
update.
for this. Yeah, thank
Great
you.
update. My
I
trading
hope
warrior brother.
everyone enjoyed it, and I will keep you updated for maybe good entries in the next weeks.
Okay, partner.
Yeah.
Everyone thank Aileen Ovicho. Ashraf Ladi on the biggest market shock in 2016. What's it say, Sinatra? And I'm going to take a quick break here. Hello, Jennifer FX. How are you? Long time, Jennifer. Are you a mother yet? Euro 125. Okay. So you could leave the hangout at any time, Alien. And you're saying you're welcome. I'm going to take a quick break. Stick around. We have another interview. We have Grant Williams with us in about a half an hour. Stand by. I'll be back. Thank you, everyone. Can see a lot of great collaboration happening right now. Be back in 5. Okay, I'm back. Euro coming off. Everyone doing okay? Big move in crude. Everyone doing okay? How are my trading warrior brothers and sisters doing? Great collaboration. You guys are sharing all your stuff. What a great place LAR is, huh? What a great place. Everyone doing all right? Market's fighting its way back a little bit. Gold's still flying. Nice Tozen. All right. I didn't have a chance. Out of oil? Okay. I still want to give you the man award, SW. SW for your call yesterday right here on this candle on the crude. You've never won the man award before, have you? You're the man. SW wins the man award. Everyone, SW, he's an oil maven. Congratulations, SW. Congratulations, SW. Congratulations. So we have one more interview today, guys. Stick around. I'm going to be speaking to Grant Williams. He's one of the founders of Real Vision Television. Who loves LAR? Give me a Y. If you love LAR and all the great idea flow and all the great guests and interviews, give me a Y. There's mine. Hello, Melon, Roland, Alexei, welcome back. BW, SW, Yevgen. Hope you're enjoying your time in LAR. FX John, Tosin, Will. Will looks like a new handle. Everyone, welcome Will to our community. Welcome, Will. Nice to have you here. As you see, we share our views via screenshots. Feel free to do so. Hip Sniffer's back again. Must be enjoying it. Ed Z, Jax, Lowell, cleaning up in gold. Izzy, numbers. Beetlefly. Hello, Beetlefly. Didn't you used to be Beetle? If you're a Beetle, welcome back, Beetlefly. Doug, FXB is a new handle. Welcome, FXB. Welcome to our community. Khalid's here, Fabian's here. Ma's back. Welcome back, Ma. Ricardo, of course. Mr. 1776. How are you, buddy? Planet, how are you? Adinda, MRC, Fab, Jake, Ali, Jennifer. The Grays are here. Hello, Jennifer. How have you been? Great to see your handle. Thank you, everyone, for your contributions to our mastermind community here. It's my mission every day to build traders up and edify them every day. A few months away from our 2-year anniversary. 3-year anniversary. Wow. Don't fade Tosin. Tosin has a great feel for daily direction, interday direction. Don't fade him. Who thinks Tosin has been a great addition to our community? I wish he would show his charts and get some screenshot software, but I've been watching Tosin's commentary and it's very good. I think you're a great addition to our community, Tosin. Who agrees with me? Stick around. Grant should be with us shortly. Stick around for Grant. Everyone doing all right? How are you, Ma? Ali, how's it going? Grays, what are you thinking here? So Euro Yen got close to that 125 target. Got down to 5.5. I'm sorry I don't have the link. Everyone hanging in there? Name your best trades today and how many pips. Name your best trades today that you liquidated, how many pips, and name your worst losers, how many pips. Okay, hi, Mystic. You know what? That's an excellent day. A lot of people are having their clocks cleaned. It's okay to do nothing. Okay, Goldie, you're still long the euro? Looking for 114. So we're all waiting for Grant. Should be here shortly. Canada looks heavy to me. Stick around for Grant Williams. Nice, Jax. Nice, Goldie. Okay, thank you, Alien. Thank you, Glenn. Doug's long pound. Good luck, Doug. I root for everyone in here. Everyone roots for everyone in here. There's no handle in here that is hoping others feel pain. So we all pull for each other here. We don't hope for other people's failures, but for their victory. Ricardo Short from 1359. Thank you, Rick. What do you got, Jax? Okay, bro. Getting pretty close to our interview here. Nice, Jax. Everyone congratulate Jax for this long euro trade here. Nice. Everyone congratulate Jax. Nice shot. Nice shot, Jax. I'm with you, Rick. So is this short Mexican peso, US dollar short Mexican peso? based upon a recovering energy market, Rick. Mystic, thank you for sharing your work. Haven't seen it in a while. Mystic is looking for 45.20. Okay, I think we have Grant here. Hold on, Grant, I'll be right with you. Just showing one more screenshot of our members. This is how we mastermind in our community, by sharing other people's work. Thank you, Mystic. So, Grant, very nice to meet you. How are you today?
I'm good. How you doing, Ed?
Good. I just want to introduce you to our community, tell people a little bit about you, that you're a strategy advisor for Voldis Investment Management, and they're out of Singapore. Is that where you trade from? Do you trade from Singapore?
Yeah, I'm based in Singapore. I'm in the Cayman Islands at the moment, but I live in
Okay. Okay, Cayman Islands, and I read also you're a co-founder of Real Vision Television, so that's Raul Paul you're partners with on that project, correct?
Yeah, Raul started that.
No wonder you're in the Caymans. Are you looking to?
That's right.
Do you have a niche for me to join you in paradise?
Well, let's find out. I mean, it's not paradise today.
Right.
It's pouring rain.
All right, Grant. So appreciate you being here with us, and you made this comment that you hate to admit it, but you've been in this business for over 3 decades. So nice to shake hands with a dinosaur. I've often told people that I used to update my charts by hand. When I first started as a runner on the CME floor, they were trading currency on chalkboards. So you and I still standing after all these decades. Very interesting environment. Very interesting environment. Of course, the worst start in stock market history, follow through in February. Market seems to be a lot of bearishness, as bearish and as much damage as I've seen in the stock market. For example, earnings reports taking things like LinkedIn down 50% overnight, all the momentum stocks cratering here. I would have thought the averages would have been much weaker with what's been happening internally for the market for over a year, because the breadth has been deteriorating for quite some time. I'm curious, do you have the same view as Raul, or do you guys at times have differing views? Because I know he's a dollar bull, and he's also an equity bear, and the problem being deflationary pressures. Where are you at as we come into the second day of Janet Yellen saying, maybe we will or maybe we won't? I'm not sure. It depends on the data. Where's your head at in the markets?
Well, look, I mean, for the longest time, I've been saying that that nothing matters to anybody until it matters to everybody, and I think we're starting to see that happen now. You know, the signs have been there. What we're seeing now, when you see LinkedIn fall on those results, it's not that the results have suddenly got really, really bad, because the corporates haven't been great all along, but it's suddenly, for whatever reason, it just matters to people now, and they look beneath the headline numbers, and they react accordingly. And so, I think once you get in that spiral, that if the mindset is to ignore the bad stuff, focus on the good stuff, and take things higher, that's fine. It works for a while. If the mindset switches to being more reality based, and you start to actually look beneath the headline numbers, then you're gonna see what's happening here. And I think the key to the whole thing is the market's faith in the ability of central banks. And it was very interesting when Kuroda announced negative rates in Japan on the 28th of January, I think it was. I said at the time that the important thing to notice was the Nikkei's reaction. Immediately, he said that it went down 900 points in a matter of minutes. And then the articles came out, and the spin came out, and the Q&A, and they kind of talked about how this was a great thing, and how it was going to really juice things, and finally be the kick in the tail that Abenomics needed to be a success. But the market wanted to go down, and that's where it went. And so we saw the spin kind of wear off, and guess what? Markets are going down, the yen's getting stronger, and it just I think shows people that central bankers, in this case in the form of Haruhiko Kuroda, are not the omnipotent gods that everyone perhaps felt they might be. And of course, if you consider the fact that they could be prone to human fallibility, then this whole thing's a house of cards, because it's been predicated on things like Mario Draghi saying, I'll do whatever it takes. And he hasn't done anything, but he said he'll do something. And if you start to doubt that he can do whatever it takes, then you start to get to the point where we're seeing now a reality reasserts itself. And the reality is not good. I mean, the reality is not good. Things are overvalued. The economies are slowing down. We're seeing consumers reining their spending in, going to cash. It's a pretty bleak picture, I've got to say.
Yes, it's amazing how you get to a tipping point where it doesn't matter, and the central banks were omnipotent, and now the emperor has no clothes in such a short time frame. A lot of people said that after Janet Yellen hiked that she was going to have to pull a Trichet and move back towards zero. And in the upcoming stress tests for the U.S. banks, they want them to include negative interest rates. Do you think that there's a possibility the U.S. moves towards negative interest rates, and what type of equity decline would take that, make that a reality in the markets? Wouldn't you have to see 30, 40, 50% declines for the Fed to have egg on its face and reverse course?
Well, look, I mean, what's interesting to me is the speed with which this stuff is starting to happen now. And so I think 6 months ago, if you'd sat down in calmer times and tried to plot the course that the Fed would have to take to move from, you know, a tightening cycle, no matter how small, no matter how gradual, to negative rates, it would have, you know, the train would have stopped at small rate cuts. It would have stopped at QE before it reached the terminus at negative interest rates. And now you kind of look at what's happening in Japan. You look at Sweden today going out to, you know, minus 4.5% with their rates. You look at Switzerland, and you look at the commentary, which says everywhere you read it, you know, central banks are looking at this because it worked in Sweden. And the difference between it worked in Sweden and it has worked so far in Sweden is enormous. And people seem to get this idea that because something hasn't happened, it won't happen, which is a really dangerous thing. So I think the path the Federal Reserve is on, of course, is going to be negative interest rates, because that's where all these other guys are going. They all follow each other's lead, and it becomes a race. But what happens between now and potentially them getting there is anybody's guess. I mean, they could reverse first for sure. They could go back to zero, but you know, they could make changes to the IOER. They could come up with QE4. They could have people's QE. There are all kinds of things they could do. And then, of course, there's this idea that they still seem to think has some validity, which is this shock and awe tactic, i.e., if we skip QE and go straight to negative rates, maybe that'll shock the markets into doing. You know what? It won't. Markets are the collective expression of human psychology and human action. You can't shock everybody. There are going to be plenty of clear-eyed actors who see this coming and act accordingly. So look, I think the Fed is on that path simply because they will have to go along with everybody else. The question is, when they reverse course, which there's no doubt in my mind that they will have to do, how do they manage that? How do they manage the admission, basically, that this group of academics who are in charge of the world economy today got it wrong? Because managing that fallout is key to how badly the wheels come off.
Well, speaking of shock, I would say the advance in gold has shocked many people. They had written it off as an archaic relic at 1040, 1050. I remember being on with Raul and said that I liked it because the shares were not making new lows while the bullion was, and my schooling was always that the shares turned before the underlying commodity. And here we are, our shares have had tremendous advances. Newmont Mining, even the juniors, has your view. What is your view on gold? Is this a rally within the context of a secular bear market? And if so, how much more upside do you think it could have? Or are we done?
Well, I've been a gold bull for a number of years, and I've been wrong. The last 4 years I've been wrong to be bullish, but I haven't. It's never been a trade for me. It's never been something I was looking to buy at 1,300 because I wanted to flip it at 1,400. You know, it's a portfolio allocation, it's protection, it's insurance, it's all those things that we talk about all the
It's
time.
insurance you don't want to have to collect on.
Yeah, look, and absolutely right. But you know, for me, having that position in gold and just tweaking the size of it from time to time makes sense. And I struggle with this concept that people seem to have. You know, I've talked to people for 25 minutes, half an hour about gold, and the first question is always the same: how high is the price going to go? And that, to me, is not necessarily the prime question here. I mean, if you own gold and you see what's happening here, you see asset prices getting smashed elsewhere, it's not about the price of gold. It's what can I swap that gold for at the point in the cycle where I believe that there are things I want to hold more than I want to hold gold. And you know, the price of gold could stay at 1,200, and if the price of everything else halves, that gold buys a lot more for your money. So you know, the fixation on the price and the fixation with treating it like another tradable instrument is not something that I get swept up in. To me, it's something that I think owning makes all the sense in the world. And there will come a time when I don't want to own gold anymore. At that time, whatever the price of gold is, I think I'll be able to swap it for assets that I think will appreciate more in the longer term. With regards to the question of where we are now, you know, I think the bottom is in. I've thought that several times in the last few years. From the technical perspective, it looks good. I'd like to see maybe another failed fall. I'd like to see a lower low get put in, and then I would feel
You'd like to see
really
one more low?
sorry, higher low. I beg your pardon. I'd like to see it correct again, but fail to break the previous low.
Okay,
and
so
turn around.
it's a higher low, like around 1100, 1080.
Yeah, I misspoke, but yeah, I'd like to see a higher low get put in, and then I'd be really confident. But I think, look, if we're not at the bottom, I don't think it makes sense for anybody to establish a full position at any one price. So I think if you are looking to be in gold, buying some in and around here to start off or to add to your position is certainly not a dumb thing to do.
Okay. Why don't we move to the dollar? The dollar really, compared to the move in gold, has been pretty muted. We've gotten they've cleaned out a lot of bearers in the euro over 109.80, 110.60. Do you still view the dollar as being in a bull market, and this too is a bear market rally in the context of a secular bull market in the dollar?
Yeah, look, the jury's out on this, and you know, Raul is unequivocal, as you said. You know, he believes the dollar goes a lot higher. I think it probably goes higher, but I think that I don't think it goes as high as Raul thinks, perhaps. And I know for one thing that at some point it will actively be stopped going higher because it's creating so many problems. And if you look at the long-term chart of the dollar, you'll see we've had two previous super spikes back in the 80s and the mid-90s. Each one of them peaked and reversed straight away. I mean, these strong dollar bull markets don't go up and then go sideways. They go up and they turn and go straight back down again. It took a Plaza Accord in the 80s to do it. And if you look at the chart in the 90s, you'll see a similar pattern. And I think the pattern will repeat here. The question is, from what point does it fall? But if you think about the context of every question that you have to kind of ask yourself in markets in recent times, it really is, what do the central banks want here? And no matter what the talk is of a stronger dollar and how important it is to the Fed, they've said that all along. At some point, and we're seeing it now with the corporate profit numbers in the S&P, you know, 40% of which are earned overseas, we're starting to see it hurt. And in an economy that is teetering on the edge of recession, if it's not already in recession, I think certainly it's fairly clear they're in a profits recession. At some point, it's going to be actively looked at to try and stop this dollar rally. So it could go higher, it could go materially higher in the short term, but it's going to have all kinds of forces at some point against it looking to move it lower, and they've proven in the past that once they put their backs behind it and they put their minds to it, they can do that. So I think it's going to go higher. I don't think it's going to go up another 30-40%.
Okay, so you bring up the mid-80s, which reminds me of the Plaza Accord. Are you looking for a Plaza Accord 2.0?
No, I think that's ultimately what it might take. If we continue to see all these other currencies moving to negative rates, then yes, of course, the dollar is going to go stronger. The question is, I mean, there's two ways to look at this. If the Fed reverse course and cut rates again and start talking about QE4, start talking about negative rates, the dollar is absolutely overbought and it will correct. However, it's always going to be the cleanest dirty shirt, the best house in the bad neighborhood, whichever one of those metaphors you want to use.
Always is a long time. Always is a long time, isn't it, Grant?
Okay. Yeah, look, fair point. But let's confine always to the era of fiat currencies. Then, in a world of fiat, the dollar is going to be the cleanest dirty shirt. It's as simple as that. And if they're all at negative interest rates and they leave it too long with a strong dollar, no matter what they do, it's going to be hard for them to engineer that move lower, simply because the alternatives, not including gold in this, the fiat alternatives don't make sense to anybody.
Okay. I have a theory about markets. You're a veteran. And my theory is that markets will take out as many participants as possible before the move they're looking for happens, then most likely without them because they're broke or they're despondent and they no longer can believe in that scenario. I just have a feeling, with all the extreme bearishness and pessimism now, that there might be a possibility of the averages, which have held up quite well in the U.S., being able to eke out one more marginal new high while people are liquidating down here. We get back above the old highs and people will have the all clear signal, and then they pull the plug out. Are you seeing anything? Very few people think there's a chance for another new high in the S&Ps or the Dow. Investor sentiment was bearish before the break this year, extremely bearish. And with guys like Dalio and very well-respected people, Icon, talking about this being a dangerous market, is there anything you're seeing that could support my view of one more hurrah in equities?
Well, I take your point about markets trying to cause maximum pain for sure, but I don't see new highs getting made. I really don't. I mean, I just don't see what the impetus would be. I think we're going to get some big bounces around here. You always see that in these bear markets. You see some very, very sharp rallies. In fact, I think something like 7 of the top 8 one-day moves in the history of the Dow and the S&P have all come in the middle of major bear markets. But I don't see that sustainable. I think we've gone from buy the dips to sell the rallies now. I think that mindset has shifted. And I think we need to find a clearing price. And it's hard to say how far they're going to let this thing go before they feel like they have to step in and do something. And unfortunately, they always feel like they have to step in and do something. I don't know what that will look like, but I just don't see new highs getting made before we get a bottom put in much lower than this.
Okay, that's what makes, definitely, that's what makes markets. You bring up, we need a clearing price. What do you think would be the clearing price for crude oil, which has been one of the major factors for the high yield market being under pressure, MLPs, spreading? Really, the fracking revolution was one of the bigger contributors to the recovery here in the U.S. vis-a-vis good jobs and employment. What do you think it's going to take to have a clearing price in crude oil?
Well, I think, look, crude's done the bulk of its big move. Less focused on crude now. Is the bottom $27? Is the bottom $20? I mean, as a percentage move from here, it's still potentially a big one. But I think the move was so sharp that it's caught a lot of people out, and I think the damage has really been done. I'm looking for the supply demand dynamics to stabilize. I mean, I don't want to get into shorting oil down here. I don't think it's going to go up again anytime soon. We may get a correction of the dollar, which might move it higher. But between $20 and $35, there's too much noise and too much volatility for me to play. If it got down to the low 20s, I'd feel comfortable buying it, because I think over the long term, inevitably it's going to go up, if only for inflation reasons, because that's what all these guys are going to continue to try and generate. But it's not so interesting to me in here because it's just too noisy, and there's just too many there's too many factors pulling at it to make it to be able to establish a clear trend in this sort of $25 to $35 range.
Well, the dollar's been moving basically sideways since almost a year, since last March, and actually it happened after a Fed meeting where Janet Yellen said they were concerned about dollar strength. So is it possible that part of the weakness in the crude oil market is not because of a strong dollar, but because of a weak dollar, which creates less demand for dollars in petrocurrency?
Yeah, it's possible, but I think there's still plenty of demand for dollars coming out of Asia, particularly. There's an awful lot of financing being done in dollars. The demand is definitely still there. I think the crude price, as I said, it's kind of just bumping around down here without any real direction. I think if someone put a gun to your head and said you've either got to buy it or sell it here, the obvious trade is to buy it. And with the dollar, I think that's less clear. If someone held a gun to your head here and said, would you want to buy or sell the dollar? I don't know. I mean, I think you get plenty of people picking both sides of that equation. You know, I really don't know where it's going to go, and I'm looking for signs that might give me a clue. But right now, I can see both arguments, and you know, I'm looking for another pop higher. Then I would think about maybe taking the dollar trade off the table. But for now, I would stay long of it.
Okay, yeah, I have targets about 102.50 in the Dixie. I'd like to bring up what do you believe could be the outcome of 10-year yields down here around 160. I've interviewed Martin Armstrong, and last October he said the next part of the crisis was going to be a sovereign debt crisis, and there's actually no signs of a sovereign debt crisis when it comes to price of bonds. They found huge money flows into the bond market. I'd have a hard time buying it. Do you think that there's a possibility that we're building, a lot of people declared the 30-year bull market in bonds dead. We still haven't made new highs in bonds or made new low yields like we did a year or so ago. Do you think that the bonds are a dangerous place for people to be that are hiding out and looking for safety?
Well, look, it depends. That's a big universe. I think that the U.S. Treasury market is arguably the safest place to be for now. I mean, that safe haven tends to move around to all sorts of different places, but for me, I don't see anything safer than U.S. Treasuries at the moment because it's just where people will go. I think Martin's right. A sovereign debt crisis it's always the end of these things. If you go back through history, you'll see at the very end of this thing, faith in the sovereigns goes, and as we saw in 08, all the risk has been moved onto those public balance sheets. So yeah, I mean, look, if you looked at it as an accountant, then the sovereign debt crisis started in 2009, probably. It just hasn't been recognised because there are too many other things to be afraid of, and governments offer that reassuring safe haven where they promise you everything's going to be okay. And again, it comes back to this notion that once the faith in the promises of central bankers evaporates, and to me, that's where we are. We're at the point where it's starting to do that. That's when these sovereign crises occur, because they are ultimately promises to repay you. And if you don't trust the sovereign, why would you hold the debt? So yeah, look, I think there will be a sovereign debt crisis. I don't know who goes first. I don't know where it starts, but it will end with the US, and so that's why, to me, you hold US Treasuries.
His view is Europe first, Japan second, and then the U.S. And I'm thinking back to the mid-'80s too. After the Plaza Accord, long-term yields started to rise quite sharply. That led to the '87 dislocation, '87 crash. So it's my view that as long as the dollar's stable, U.S. Treasuries will be stable. But should that trend change or reverse, the underlying currency of the instrument is really the linchpin of confidence of whether or not governments are going to be able to issue paper at low rates. As the currency depreciates, rates will have to compensate. Don't you believe that?
Yeah, but look, I mean, picture a world where the U.S. has negative rates. What is the state of the rest of the world at that point? You know, if the Fed were to move to negative rates, I mean, where would Europe be? -2, -3? Where would Japan be? Where would all these countries be? They'd have to be in complete disarray before the US got to that point. Now, I'm not saying that's not where they're headed. They're certainly on that path. But you will have that moment where the only thing left, to me, the last man standing will be gold. And I think, but before you get to that point where people will want to own gold at any price, simply because it's the only asset you can own that has zero counterparty risk, essentially. Before you get to that, there are a series of, call them stops if you like, that need to be taken out, and the dollar will be one of those, and U.S. Treasuries will be one of those, and it's when faith in those starts going that you're really going to see the rush into gold, and I don't know when that comes, and I don't know if they pull some miracle soul out of places that we can't even imagine yet. I really don't know, but the path to me is fairly clear. As always, with any time you're trying to figure out what's going to happen in financial markets, it's the when that's the problem. It's not always the what or the how.
So you're involved in running this hedge fund with Raul. Do you guys in your hedge fund take advantage of bear markets and short things? What's the disposition of what's actionable, and how's your portfolio structured in this type of environment?
No, Raul and I don't run a hedge fund. The project that Raul and I work together on is really.
Oh, okay. Well, you're a strategy advisor for Vulpes. What kind of strategies are you executing now?
So as far as that side of things is concerned, at Vulpes we were moving out of markets for the last 2 years, and into real assets, into real estate, into agricultural land, into essentially things that can't be printed, and that offer a yield component that would synthesize a bond portfolio, and that's worked really, really well. And I suspect you're going to see, as these currencies really start to be depreciated, you're going to see people moving into these hard assets again. It's the gold case, but for example, real estate in Germany throws off a really good yield, which obviously gold doesn't. And agricultural land, if you grow the right crops and you sell them, there's 1, sometimes 2, sometimes 3 coupons a year when you sell the food off. So
you can't eat gold. You can't eat gold.
No, but you can buy avocados with it. But it's only being in equity markets because it's the easy thing to do is just abdicating responsibility. Buying into unlisted private cash flow producing businesses. It's time. It's time to really invest and not just to speculate on stock markets. And the cult of the ETF has just made it so easy for people who come up with a good idea. They'll read an article in wherever, in Forbes magazine or something, and they'll decide that biotech is the next big thing. And it used to be that you'd spend a couple of months poring over all the companies in the biotech sector and working out which ones you thought were good and which ones you thought were bad, and then you'd weigh up how to structure the trade, and if you wanted to do longs versus shorts, just wanted to get long or whatever you wanted to do. Now you read the article in Forbes, you go and buy the ETF. And it's just made people intellectually lazy, and it's made investing more like a video game than actually doing the solid groundwork. And so to actually get back to that, to go in and look at companies and invest in businesses that will throw off cash in the real economy is hard work, and it's tough to do, and it requires capital, but it's a very sensible way to invest. And of course, the genesis for us deciding to do that was coming in on a Monday morning and finding out that a junior central banker somewhere had said something at lunch on Friday, and your portfolio was down 4%. I mean, it's ridiculous. That's no way to try and invest for the long term. And
so do you believe? I can understand the farmland because the yield and food shortages in the world and commodity prices. Grant, I remember when corn was $2 a bushel, and beans were $5, and wheat was $3, and they're all doubled those prices, and well off their highs, their bubble highs. Beans in the teens was a war cry of us Chicago traders a long time ago. But what about residential real estate? Here on the coastlines, we've actually recovered past the 07 highs. Do you think that in this deflationary environment that real estate prices could be vulnerable once again like they were in 2008 through 2010?
Well, again, to me, it comes down to the coupon. And if you've bought a property that has a good rental yield, you've got a nice cushion. But obviously, in the last couple of years, you've seen that get stretched. Now, Volpez, we went to Germany to look for real estate because A, nobody was looking there, and B, it's a country that hasn't had a real estate bubble. I mean, the Germans are, as a culture, are renters. It's not a home ownership culture, and so you didn't see this wild price appreciation. As this whole thing has played out and yields have gone negative, and people have been forced into really thinking about what to do. It's become obvious to Germans that owning property and actually renting it out is a smart place to put your money. So you're starting to see that capital appreciation, but that's just a bonus. If you can buy real estate, residential real estate that you can rent out and get a good yield, 8, 9, 10% in many cases, it's a decent investment because you've got that cushion. What you need to be careful of are the trophy properties and the stuff that's reached a point where when you rent it, in Singapore where I live, rental yields are, ridiculously low, 1%. It's why would you want to buy a multi-million-dollar property that you could rent out for a 1% yield? It just doesn't make any sense. And the only reason they're there is because obviously you can borrow money at 1% from the bank, but it's not a long-term solution.
Okay, well, I'd like to wrap it with this. It's been a great interview. Grant. I'm hearing myself echo. I don't know if you're in the room or not, but what do U.S. politics look to a guy in the Cayman Islands, and are you seeing U.S. citizens flocking to havens? With what I see possibly coming here down the road, I would prefer to watch it on TV. I live in San Diego. It's a beautiful place, but I would rather watch what I think may happen with social unrest, etc., in a crisis environment on television. Like maybe even watch it on Real Vision television, then watch it and be in the middle of it here in San Diego. What do you think about the fact that the politics even globally, Grant, have remind me a lot of the 30s, where you have extreme right-wing leaders and you have extreme left-wing. It reminds me a lot of the 30s. Donald Trump here in the U.S., I would, kind of a strong man, dictatorial type, and Bernie Sanders, closest thing to a communist that has ever run for president of the United States. There are countries in Europe where the right wing is really gaining strength, and we know how right Europe went in the 30s. What do you think is the outcome politically of this type of radical extreme moves to polar opposites in the world, and especially here in the U.S.? What are your views politically with the contenders that we have vying for the presidency here in the United States?
Well, look, honestly, it's not a great surprise to me watching this. I've been watching this unfold through the European lens, as you've said, where this has been going on for several years now, with the rise in the UK of UKIP, for example, which is a right-wing party. It's not as far right as some would paint it. But when you watch what's happening in the US, look, I completely understand it. I totally understand where it's coming from. People are disenfranchised, they're disenchanted with the existing and incumbent and the system. And unfortunately, the alternatives they've been offered are Trump and Sanders. Now, I don't think either of them is fit to be president. However, there's a very real chance that one of them gets in. And if you think that through, from the Trump perspective, I was thinking about this the other day. Trump somehow managed to. I think if America woke up on the morning of his inauguration, there'd be a lot of people saying, whoa, wait, I voted, but I didn't think it actually counted. I was just making a point. But it would be very hard to see how Trump could perform worse than expectations. I think there's no doubt in my mind that he'd be a one-term president, and it might, unfortunately, be the kick in the pants that the US needs. But something like that to happen, and people wake up and go, geez, we've got to fix this because this cannot be allowed to happen again. Now, the damage he could do in those intervening 4 years, who knows? but essentially, if you look at Obama's performance, the president's hands are tied. So Trump is going to struggle to do the kind of damage that people. I mean, he could do a lot of damage with that mouth of his, but from a policy perspective and actually get anything done, he's going to struggle to actually do any lasting damage, I suspect. I mean, he could surprise me. The Sanders side of things, for a country that's just gone through $19 trillion in debt, having an avowed socialist at the helm is arguably potentially more damaging to the United States than having a blowhard at the helm. And I do worry, should Sanders get in, what that might do to the things we've been speaking about: the credibility of the dollar, the stability of the U.S. financial system, and of course the deficit. So that neither of them are good choices. I'm fortunate; I don't have to vote. I'm English, but
Yes.
As somebody famous once said, don't vote, the government always gets in, and this is going to happen again this time. And I really, look, I still think there's a lot more to come with Mike Bloomberg, who must be sitting at home just relishing every minute of this, because he becomes more and more credible candidate. And I think the later and later he leaves this, the better shot he's got, because people, as you approach tipping points, as you get nearer and nearer the election, people are going to get more and more frightened about the idea of either Sanders or Trump being president. So I'm sure Bloomberg is going to be the ultimate winner of this little.
He does have one fascist. Bloomberg does have one fascist decree, though. Do you know what it is, Grant?
What's that?
Besides not being able to drink 64-ounce sodas,
Well, yeah.
Every household will have to have a Bloomberg terminal.
Well, hey, listen, if nothing else, it'll make everybody a lot more informed about financial markets.
Grant, thank you so much for hanging out with us here on FX Street and sharing your views. It was, I really enjoyed our conversation today, and thank you so much for letting me grill you about all these different things that we have going on. Say hello to Raul for us, and again, I wish you a lot of success in this year of 2016, and hope to talk to you again. I know that you're probably not a trader, but I hope you're not offended. I'm going to call you my trading warrior brother.
All right, I appreciate it, Dale. Thanks a lot.
All right, Grant. Nice to meet you. Thank you so much, everybody. That has been Grant Williams. His Twitter handle is at TTMYGH. Any other place where people could follow your views and work besides your Twitter handle?
Yeah, sure. I mean, ttmygh.com is the website.
Oh, it's a website too. Okay.
Well, yeah, that's the bi-monthly letter I write called Things That Make You Go And
oh yeah, I forgot to bring that up. You're the author of Things That Make You Go You must be humming a lot, and I know that I'm every day I turn on my platform. So that's turned into quite a popular periodical. How often is that published?
So I write that every 2 weeks. That comes out,
okay.
And it's just a look at some of the crazy things going on and trying to figure out what it all means, which is an interesting process to sit down and try and do.
Okay. Well, all I can say is, and thank you, Grant, for your time today.
Thanks, Dale. Take it easy.
All right. Good hunting, buddy. Thank you, everyone. That was Grant. You can follow him at his website, ttmygh.com. Things That Make You Go Could be some interesting reading. Crude's giving it all back. How's everyone doing? So he's also involved with Raul Paul, who I've interviewed a few times. Probably time for me to do a wrap-up. Another failing rally in crude. New lows will not be confirmed again in crude. Waiting to look at the euro here. Euro's still grinding up. I think we have a short setting up here a little bit above 114. US dollar yen's probably still under pressure. There's no divergence. And Canada, with crude making about to make new lows, is really dogging it. I'm really very unimpressed with the action in USD CAD, considering what's happening in both equity markets being under pressure where it usually thrives, crude oil being under pressure. So I think that perhaps the most we could look for in Canada would be the 50 to 61.8% retrace. And the Dixie also looks like it did not bottom according to Cyric. I want to thank everyone for their contributions today. Thank you, Cyric, Jay, Lowell, Timbo, Adinda. What a great interview by Alien Ovicho today. Ricardo, Tosin, Glenn, Sinatra, Mystic, Jax, great Euro Yen trade, Jax, Forex Top Hunter, Doug, Melon, Roland, Alexei, BW, SW, what's the man today? Great crew trading, Yevgen, FX, John, Will, Pip Sniffer, JM, Ed Z, FX, Numbers, Beetlefly, FXB, Geekatic, Ma, FX Video, Planet, MRC, Fab, Jake, Ali, Jennifer, FX, the Grays are Tim and Izzy. So we'll wrap up the week tomorrow, everybody. Thank you for all your great contributions. You know what I say every day, wearing my busboy shirt. Don't just count your pips, count your blessings. Money comes and goes. Time is gone forever. Make it count. And thank you for spending some of your most precious currency, which is your time, hanging out with everyone, with me and Lar, and for sharing your ideas, which cost you tens of thousands of dollars to get good at, and come in and share it generously with the community. So everyone, that's it for me for today. Good luck the rest of the trading session, and I'll see everybody tomorrow. Adios.